Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Monday, February 24th, 25. Well, the buy the dip rally failed. Markets ended mostly lower. The Dow finishing barely positive after being up over 0.5%. And the mega caps outside of Apple continued their fall. Email address is marketmripro@gmail.com. Thanks for joining this today. And if you're new to the channel, hit the subscribe button and the alarm so you get notified when I post. I'm always open to comments. Those, if you're looking for the wealth charts video, I just finished it. It'll be posted on stocksanddocs.com around 8:30 in the morning. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools in multiple platforms, but I'm an independent trader. So if you're seeing this on YouTube and you want to get notified when I do these, if you want to be invited to a special educational sessions for no charge, join my Google group. It's free. It's called Top Down Trader. I don't do it for solicitation. I do it for sharing of information and inviting to sessions. Of course, since I have tools in the market, if I'm going to give any discounts out, I'm going to give them to Top Down Trader members, and they'll receive from time to time some offers on some of the things that I am doing. All right. How do you join? Sign into Google Groups, click on Groups and find the one you want, which is Top Down Trader. Pick how you want to be notified, email or digest, and I will add you the next time I go to the site. All right, Leaders Index back to life support. And this is kind of depressing. We rallied off the 50 and we came down in 4 or 5 candles, broke through the 50. I'm about to say this is done. One thing that's important to know if you're new is we created a list of leaders back during the rally up into Thanksgiving. And the hope would be that those leaders would give us an early warning signal of the market breaking down. And if you look at this, you can see the market broke down, or the Leaders Index broke down, but then it went into a bit of a cup and a handle and a failed breakout. I think that failed breakout tells the story. And I'm going to stop following this if it breaks down any further on Tuesday and say it's done. Typically when the Leaders Index breaks down, the market follows it. And that's why I want to keep giving it a little bit of room. But if we don't close higher on Tuesday, I think that tells me something right there. You'll notice, I'll show you a couple of things. Up here is called the Hindenburg Omen. Now, it's firing all over the place in HGSI, www.highgrowthstock.com, which is the program that Ian Woodward influenced, and it's still a great program today. That's interesting because that's a very bearish sign if that's true. So we'll wait and see. It wasn't firing on some of my other programs that do the Hindenburg, but this one is interesting, and this is on the NYSE. Now, this is buckets. Now, imagine you take the stocks in an index, and here we've got 4 of them: the NYSE, the NASDAQ, the S&P 1500, and the Russell 2000. You look at the percent B. Now, what is percent B? Imagine Bollinger Bands around the stock, and we know that stocks will have a tendency to stay within those Bollinger Bands 90% of the time. The 20-day simple moving average is actually the center of the Bollinger Bands. During an uptrend, stocks will go from the top of the Bollinger Band down to the middle, back to the top, down to the middle. During a downtrend, they'll go to the bottom, back to the middle, to the bottom, to the middle. So the first thing you can see is there's an abundance of red columns compared to the green columns, meaning they're much bigger. And that tells me, I call that a shift to the left, and that's a weak formation. But then you see the white column, and these are stocks below the Bollinger Bands. We went out of the market with 22% of stocks below the Bollinger Bands of the NYSE, the same as on Friday. We are up to 25% of the stocks below the Bollinger Band on the S&P 1500. We're up to 29% of the stocks in the Russell 2000. Think about it. 600 stocks in the Russell 2000 are below their Bollinger Bands, and 23% on the NASDAQ. We are getting to a level where we almost always see a bounce. Now, will it be a tepid bounce that we saw early in the morning on Monday, or will we actually bounce and rally, give us maybe a dead cat bounce for a couple of sessions? I don't know. But this tells me that we're getting close. So maybe in a day or two, we'll bounce. We could bounce on Tuesday. My guess is we wait till NVDA earnings on Wednesday night, and we'll see if they are good enough to take the market higher, which would certainly be a wonderful thing for those of us that are long NVIDIA, although I did put a collar on it, and hopefully that'll help me. All right, so let's go into the timing model, and this is the daily, and you can see that the daily is in a sell mode on all four of these ETFs. As I mentioned yesterday, that makes me more bearish, even though the weeklies were 2 and 2. And you can see pretty significant down sessions here, down 0.46 on the spider, down 1.3 on the Qs, down additional 0.73 on the Russell. And the one thing that resisted the downtrend and up 0.09 is the diamonds. You could see it rallied even higher. Really a bad session on the market. If I look at the weekly timing model, give it a second to run, you could see that we are in a sell signal on the spider because of this bar right here. Although we're above the WMA, the bongos are red. We are in a sell signal in the Russell. We are still above the WMA on the Qs and in a buy. And we close, let's see, the WMA is at 434, and we closed at 434. We're 16 cents, 26 cents rather, above the WMA. So both the WMA has to be broken and the bongos turn to red to flip to a weekly sell. So 50-50 on the weekly, all down on the daily, and that makes me more negative than positive. And if you really want to look at something positive, you look at the monthly charts and see that even though we've seen some pain this week, especially on the Russell here, you look at the spider, you look at the Qs, you look at the diamonds, it's an inside month. Really nothing has happened so far. But it's been a little bit more painful than that for most people. If I look at the index ETFs and try and get a sense of where we're going, let's just blow them up one at a time. So the spider has had a big run up, as you can see. It is now broken below the 50. Let's see, do this and I'll bring it right back to my one. Here, here's a 17, the white is the 50. You could see it had a bunch of red dots on Friday, showing a number of bearish signals, and even the PSER reverse. That's a bearish. Now, where is this going to go to? Well, I like to have my potential where it runs, and I kind of think that this is my target right there. And why? Because notice it was prior support, resistance, should be prior resistance, support, resistance for a couple of days, support, and it seems like a natural that that would be my target. Now, how far away is that? Let's put my stick on this, and the horizontal line is at, or it's not going to tell me. So it's at 575. We're at about 600. So we're at about 4 to 5% away. So where is my three scenarios? Scenario number one is we bounce and we go higher on Tuesday. Scenario number two is we do a trading range around here. Click the arrow again. I can see that I want to change how that works. And we bounce around. And then scenario number three, the low road scenario, as we head down to here. We'll have to wait and see what we're going to do. But I think that this is a market that is definitely at risk right here. Take this one out. All right, so that's the spider. Let's look at the Qs. Very similar to the spiders, breaking down below the 50. This is an area that's bounced before. My target's probably in this area here at 500, which is another 4%. And I think it meets up with the 200, and that should be really good support, as we saw here, here, here. But hopefully we bounce before then, because another 4% is going to hurt. If we look at the diamonds, unlike the others, the diamonds were actually closed higher, up 0.09, but notice they traded into the 50, which became resistance and failed. That's disturbing. Will it break above, or is it going to come back down and go visit in this kind of a somewhere down here, the 422, which is another 3 or 4%. I think that it's likely that we ultimately pull back there, but will we rally first? And then if we look at the IWM, this is what you don't want to see, is you don't want to see a break below the 200. It failed. It broke below 200 on Friday, failed at the 200, and broke down. Kind of a short signal to me. So that's very worrisome in my mind. So the markets don't look very supportive right now, at least in my opinion. Now, one thing that surprised me in the market and maybe disappointed me is, did we get enough of a move of the VIX? So the VIX was up in the market another 16%, but the VIX is nowhere close to where it was at this major bottom in December, but it is getting to an area that the market's turned around. The dollar continues to bounce around the 200, so that's not impacting us too much here. If I look at commodities, gold was up a bit, silver was down. As you can see, gold was up a tad, up 0.54%, while silver was down, similar amount, 0.51. Oil looks like it's bouncing now around the 200, not doing much. Natural gas actually dropped significantly, almost 3.5% on Monday. The 10-year continues to fall, down 1.1%, and the 30 was down 0.45. I have to ask myself why. Is it economic concerns? Is it tariffs? We heard today that Mexico and Canada tariffs are going to start taking effect soon. More bargaining chips for Trump, but those 10-year and 30-year coming down in the setting of the inflation before the PCE, a little bit concerning about what are we missing. If I look at the daily brief to give me a sense of what happened in the market across the board, let's do close. Let's rank close by performance. So the volatility was up the most, followed by the diamonds. The worst was the Qs, especially the mega caps. If we look at closing range, look at this. The Qs closed right at the bottom of their daily range. If we look at new highs and new lows at the various time frames, all negative. If I look here at the sectors, what led, I bet defensive, and you got healthcare, real estate, financial, staples, mostly defensive looking. If we look at what lagged, technology. So, definitely rotation into the defensive sectors. If I look at the market breadth to see if we see a new Hindenburg or other signals, we don't. You can see here the NASDAQ has broken the 50, and the NYSE actually looks a little bit stronger, at least right now. Ratio charts are going to show us that the defensive utilities, staples, real estate, and healthcare are all rallying here. Communications is holding up better than most. So now we go to the JAS layout and we go into the top-down view to start with. And if we look at the different sectors in the market, the only sectors that were up were staples and real estate. And if we look at consumer defensive and look at what really did the best, CHGG, but don't look now, they had ugly earnings. Well, they didn't do well after hours, we'll put it that way. You can see it's already in. Negative surprises on earnings and a drop in revenue, although higher than expected, and I think it's down about 20% after hours. Fresh Pet, after a big move down. Cody, in a tough place. Hims is another one that, this one got to be careful of. I love their business model, but you can't get your Mounjaro, your Wegovy, and your Ozempic there from a compounding pharmacy if the FDA says we have a supply. So I think their business model is going to have some pressure. But they also sold off after hours, even though I think their earnings were pretty good. Look at this. Big change, surprise, surprise, our big revenue. But the story about the compounders and the FDA, I think, hurt them. Now, Hershey is one I looked at over the weekend, making its run on the 200-day moving average. Boring, Campbell Soup running up. I don't love consumer staples. They're not growth stocks, but sometimes they're the right thing to buy in a difficult market. And we talked about that some over the weekend. Real estate, another thing that was up. And let's just look by performance. Come on. And this is one I like a lot, SUI, Sun Communities. They actually announced a divestiture of something that I didn't know they had, and they rallied on that. Their earnings are out in 2 days, so I don't usually start entering position 2 days before earnings. This is one that I've been watching, New York Mortgage Trust. They pay a big dividend. If we go up here, we can see the earnings are out, and their dividend they pay is 13.62%. That's a pretty healthy dividend. It's been going sideways for quite some time. But notice the volume, the blue dots, and the pickup in relative strength in OBV. What else? This is a REIT that has a story with the Vegas and other casinos. They own a lot of the property, and you could see earnings are out. They did well in revenue, not so much on earnings, and they pay a 5.7% annual dividend. And this is one that actually looks kind of interesting, and I looked at it over the weekend, and it is broken out of that trend line. So I like that one here as well. All right, but again, we're talking boring sectors. Another thing I could do is just rank, let's rank by 2-day momentum, the industry groups. Let's take 1, 2, 3, 4, and 5. They're the only ones that have been positive. Now let's rank by percent. And let's fill in 6, 7. Oh, my bad. It's still stuck on REIT. So let me stop that. And we'll get out of that. So I think I have to go back here. And we go back here now. They're staying in REITs. Why are you doing that? Well, let's click them all. All right, hold on one second. Okay, I got that reset. So if you look here, we're going to rank by 2-day momentum, and we're going to take the top 10. 1, 2, 3, 4, 5. You notice this is building. 6, 7, 8, 9, 10. Whoops. I like distributors. So now we've got the stocks that are in the top 11 industry groups. We've got 101 stocks. And let's look at 2-day momentum. Berkshire. Well, isn't that interesting? Berkshire is breaking out when we're hearing that our friend Warren is in cash. Well, that's interesting, or raised cash. That's actually optimistic for the market. Now, did they have earnings come out, and is that why? So earnings came out on Friday. Look at the earnings here, and the change in the surprise, the revenue. So this is probably a story stock and not indicative of where they think the market's going. Bookings. I'd like to see a breakout above that top. There's that SUI, which is one of my favorites of the night, so I'm going to add that to list A. Amgen, a biotech that's persistent despite loss of exclusivity and a need to move to new products. Healthcare is strong. It's breaking above the 200. It's in EMS. It's got a CPR buy. It's got a breakout in momentum. It's relative strength in OBV. I think Amgen looks good here. Here's one of our our staple stocks. SAM, another staple stock. Boy, is that thing clobbered. Lilly, one of my favorite pharmas, broke above the 200, retested. I think this one's going higher. The maker of Mounjaro. So let's add that to my list. RGA is a reinsurance group of America. I'd rather buy above the 200. Celsius, we talked about over the weekend. This thing did not continue. And here's one of the distributors, McKesson, that I think is one to watch. These are companies that seem to do well during periods of a tough economy, and they are operating wonders. I've sold companies to McKesson and to Cardinal and AmerisourceBergen, now known as Cencora, and these companies are machines. So McKesson looks interesting, especially if this market stays tough. Now, I'm not advocating going out and buying anything long tomorrow. Don't take this as buy. I'm just looking at what looks interesting. Another way is bottoms up, where I take the big list of stocks and let's run my favorite scan and see if we get anything. Price above $5, volume above 500K, and you can see the 3461 goes to 1938, and now let's add a signal. Let's add the 2-day momentum signal, and it looks like three things. Sage, this is a beaten up pharma and biotech, don't know enough about it to comment. Unity Group, this is a real estate. I like the pattern. You look at a weekly for a second and see, all right, so it looks like, is this an IPO monthly? Yeah, this must be an IPO, okay. Run up, sideways move, looks like it might be getting ready to break out. Remember, this was a negative session in the market, and they were up 2.87%, even though they closed off the highs. Check here for earnings. Earnings are out with a up change and a surprise on earnings and on revenue. It has volume, and gap, breakout and momentum. So that one looks interesting. That might be another one for me to add to my hot list A. And then U is a Chinese stock. Maybe not. This is the old clear. It's below the 200, so I'm not too interested. This signal is specifically looking at stocks that, like we saw down here, they don't happen often, but when you get these two green dots at the same time, it usually shows you we're about to start a move. Doesn't always happen because we got it over here as well, and that turned out to be a false breakout, which is its own story. So I've looked at the markets. I think we're going to get a bounce, especially if NVDA earnings don't disappoint, but I'm not sure we see that to the end of the week, Thursday or Friday. Don't forget, Friday we have the PCE, and that could take all bets off the table. A soft PCE, the markets will rally. A hot one, I don't think the markets are going to be very happy. So have a great Tuesday and Wednesday in the market. Probably won't do this again until Wednesday or until Thursday night, or Wednesday night rather, and we'll see you then. And please consider joining my Google group. If you like this video and you want to understand what all those crazy name signals are that I use, join the group, and I'll share with you a link to the 3.5-hour training session that I did just a couple weeks ago. Thanks, everybody.